Bitcoin is pumping at the moment. It's about $70,000. Do you have any kind of overview thoughts on? Oh yeah, you've got the block clock mini right there.
Yeah. My first thought is just to savor it because bear markets are long and painful and depressing, and people seem to forget about Bitcoin. Bull markets are so exciting. It seems like everyone is thinking about Bitcoin. Everyone's focused on it. The media comes out, and I have this long thread on Twitter about bull markets and how they play out. And one of the things I observe is that the media attention really starts to pick up right around when Bitcoin makes a new all-time high. That's like sort of, a momentous moment in the bull market that, oh wow, Bitcoin's not dead. Not only is it not dead, but it's overtaken its previous all-time high, which we all said was crazy and irrational. And so the interest comes back, and then that's what I would mark as the beginning of the sort of parabolic move in the bull market. And eventually you get this huge climax of interest, and everyone's pouring money into the market. What happens is you run out of people who are reachable in the cycle, participants who are reachable in the cycle, and then you get the inevitable crash and panic, and then you start the bear market phase. So I would say, if to give a baseball analogy, we're probably in the third or fourth innings of this bull market. So we're, somewhere in the middle of the bull market. I had written on Twitter, I think it was in November, that I believed that we'd started the bull market. And one of the things about bull markets is they start off kind of slowly. There's this like slow, steady accumulation, and the price it accumulates slowly because you have this overhang of supply. You have all of these people who bought at prices higher, and they're just looking to get out. They're just hoping that the price gets up to, say, 40,000 or 50,000 or 60,000, and when they get whole, they get out. And so you have this overhang of supply of people who are just looking to get out. And I know people, unfortunately, who have thought this way and used it as an opportunity to get out of Bitcoin. But once you get to the all-time high, there really is no more overhang of supply, and then you have kind of this open field of price discovery where the price can really start to go parabolic.
Yeah. Now, do you think it is different this time in that we got an all-time high before the halving, whereas traditionally it's come after the halving? What does that portend for us? Does it mean anything, or is it just, we're hitting it a bit early this time?
Yeah, I would say I wouldn't put too much significance on it, except to say that the last cycle was a little strange in that it was muted. What didn't go as high as people thought, even as high as I thought it would. And I think that pent up energy of people who had been accumulating Bitcoin and had strong hands kind of transfers forward to the next cycle. And to me, it reminds me a little bit of the 2017 cycle where we had this really long, painful bear market, and we really scratched and clawed our way out of that bear market slowly through 2014, 15, and 16. But then you had this huge amount of energy, and Bitcoin rocketed, 20x in less than a year. So it has those vibes to me.
Yeah, and I think interestingly, I remember writing about this as well, but in 2017, people have this perception of, just 20,000. But actually, it spent 75% of the year under $5,000, and it spent 90% of the year under $10,000. So it's all just that last sort of few months where it really just went from 5K up to like 20K and then, crashed down after that. But I wonder, maybe that's a similar kind of thing where you, as you were saying, like you get this kind of slow build up, and then at the end it just really kind of goes insane.
Yeah, that's absolutely correct. That's one of the points I make in my thread on bull markets, is that a lot of the gains and the headline number that comes out of a cycle, like 20,000, really comes in this very short period of time at the end of the cycle. So I don't know what this cycle is going to look like, whether we get to, 200, 400, maybe a million. I don't know where we get, but it seems very likely that the last part will be very concentrated into a small amount of time. So for instance, we could be, and this is all hypothetical, we could be kind of moving around 90,000 to 120,000 for like months this year. And then all of a sudden we go from 120,000 to 250,000 in the last like month. Something like that would not surprise me at all, because it is the nature of these parabolic moves that most of the move happens at the end. And it is really interesting because later on people think back to the cycle and they think, oh yeah, 20,000 was the high, but for 2017, but really only very few people participated in that last part of the cycle, because it only took a couple of weeks, I think, to go from 10,000 to 20,000.
Yeah, and so the paradoxical thing, though, is for a newcomer, the time they got interested was when it was close to 20,000 in that example, in the 2017 example. Or the time when the newcomer from the 21 and 22 cycle, the time they got interested was when it was like $60,000. And so from their perspective, it's like, especially if, for that person who, quote unquote, bought the top of 21, maybe they bought around 60K, let's say. And so they've spent all this time underwater on let's say, on that early buy. Now, of course, if they've been a good, DCA stacking sats, they've been accumulating and their average has, come down because of that, because they've been purchasing. So, they're further up in the green by the time we get back up here. But it can feel psychologically difficult for that person because of how much time they had to spend underwater.
Absolutely. It's really hard to feel like you've bought something and you're underwater on it. And this is why I say there's an overhang of supply. For the people who can survive that and have held through that cycle and hold through to the next cycle, they become really strong hands. That's my experience. But I would say probably the majority of people who bought near the end of a cycle are the ones who are desperately hoping that they're made whole and then they exit.
Yeah, I see. And so that's like a similar dynamic that I've seen, as you mentioned, the supply overhang and people. It's almost like they've been underwater and now they've finally got a chance to kind of come up for air. And sadly, they paradoxically again end up counterintuitively they end up selling at one of the worst possible times because it was just about to they've just come back into the black or back into the green, whatever you're calling it, and they're kind of selling off a chunk there and missing out on all the gain that's to come.
Yeah, and it's an interesting point because I'm not a trader, but I will say I do believe that risk adjusted, the absolute best trade on Bitcoin is just after it clears its all-time high. Like when it makes a clean break of its all-time high, that's when it's really on. That's when the parabolic move is about to start. So, if I was a trader, I would be looking for that as like a 4-year trade. Every 4 years, wait till Bitcoin breaks its all-time high and then go all in at that point. And like I said, I'm not a trader, I'm not advocating this, but just observationally, this is what I've seen over the last 4 cycles that I've seen, is that is the perfect moment. It seems more rational that the best time to accumulate is during the bear market. And if you're DCAing, that's totally fine. But as a trader, it's really, really difficult. There's so much chop in a bear market where it'll go up like, 50%, but then it'll drop 50%, and it just chops around. It cuts traders to pieces. Most people who are trading Bitcoin in a bear market get completely wrecked. But the bull market does offer some trading opportunities, and probably the best one is the moment when it gets through the all-time high.
Yeah, and as you mentioned, and I think Thomas Lee, aka Fundstrat, also popularized this notion of the best days of the year, right? So it's kind of like this idea of timing the market is better than timing the market, and he's saying, look, you don't want to miss those days, and if you're out, if you missed like the 10 best days, you missed most of the gain, and so that's why it's so important to just make sure you have an allocation, and obviously you got to have confidence and have an amount that you are able to hodl, right? Because I think this is also paradoxically, sometimes people go too hard in a sense, and they try and buy more than they can actually safely hodl because maybe they need that income or they need that money to pay their rent or their bills or whatever, or maybe someone's retired and, it's important to have an amount that you can hodl, I would say minimum 4 or 5 years, ideally 10 years is a good hodl period, I would say. But, obviously when someone's new, it's quite confronting to say, hey, you're in this and you got to hodl for 10 years. But, if you can hodl for 10 years, I mean, historically, you've done amazingly.
Yeah, one thing I would say that's interesting about the psychology of this is that people find it easier to hodl when they're in the green, even if there's no rationality to it. What matters really is the percentage of your portfolio. So, someone who's in the green who has like what most financial advisors would say is an irrational amount of Bitcoin, like let's say 50 or 60% of their portfolio is Bitcoin. But the fact that they're in the green makes it easier for them to hodl than someone who has, say, like 2 or 3 or 4% of Bitcoin, but they're in the red and they're like, oh man, I can't believe I bought Bitcoin and the 7% of my portfolio has now turned into like 3% and I just want to be made whole so I can get out. So it is interesting the psychology of being in the red or in the green. Um, and my other comment about that is I completely agree with what you said. You need to get the right position size. Choose the position size in your portfolio that you can hodl through adversity. For some people, that could be, only 1 or 2%, but for other people, it could be 10 or 20, or, I know people, and I'm sure you do too, who have like 90+% of their assets in Bitcoin.
Yeah, so I mean, ultimately, people have to decide what's right for them and what their risk tolerance is. And I think this is a common point. I've made this before as well. Is that it's common for people to overstate or overestimate their risk tolerance. Right? How much of a drawdown can you withstand? And if you're gonna be a real hodler, I think you got to be willing to hodl through an 80% drawdown. Now, you and I have lived through that, multiple rounds of that, but I think you've got to be ready for that to come in the future as well. Like it's happened before, it could happen again. And I think a common narrative that comes is, oh, it's the super cycle. This time is different. We'll never have a big 80% drawdown again. And, people were saying that last cycle, and I was against it then as well, saying, no, guys, like be ready for a drawdown, but I think that's an important point for people to think about. Like we might have cycles to come, right?
I think it's I think it's embedded in human nature that we're going to see these cycles because you can't have a steady, predictable uptrend in something because people see that and they're like, oh, that's just going up and up. So I'm going to get involved in it. And people start crowding into the trade. That's when it starts getting parabolic. People get ahead of themselves and then you run out of folks who are willing to participate in the cycle and then you're going to get the crash. I just think it's part of human nature. I just can't see a situation where an asset goes up steadily, consistently over many, many years and people don't pile into it.
Yeah, I think it's like biologically or somehow naturally, we are just naturally momentum traders, right? Like if you just kind of think about what most people are doing, they see
We're
it going
herd
up and
animals.
we sort of chase that. And, what happens, to your point about how many people are reachable in the cycle, I think that's the important point. And it's also how many people are reachable and are willing to hodl, right? Because, I mean, here's the other point we could make, right? The ETF, now, of course, you and I will tell people, hey, not your keys, not your coins, self-custody is best. But nevertheless, you could argue that the ETF has just blown the door open in terms of how many people are quote unquote accessible, right? Now, historically, maybe we could have said, look, it's easy to just go sign up on an exchange and, do whatever, buy Bitcoin, whatever. But in practice, what it seems like is a lot of people wanted it to be just a ticker on their stock portfolio app, whether it's Charles Schwab or E-Trade or whatever, and they just need to be able to buy a ticker that they on a platform that they've already done KYC, they've already done the hurdles. Maybe that was the real game changer with ETFs.
Yeah, it is. It definitely is. There's quite a heavy lift to get someone over the line to do KYC and to explain to them what a wallet is and what Bitcoin addresses are. For normies, that's really difficult, especially when you're trying to convince them to, put in an allocation of 1 or 2%, and then you say, well, you've got to figure out all this other stuff. But they already have that sunk cost with most people have brokerage accounts. Most investors have a brokerage account. They've already got the sunk cost of doing the KYC and they can easily go on and they understand how to buy stocks and, oh, I can buy Bitcoin as easily as buying stocks. I really do think this is profoundly important that the number of people who are now reachable to get an allocation to Bitcoin is probably at least a couple orders of magnitude larger than it was beforehand. Um, and it is also important to acknowledge these people are only getting one piece of the Bitcoin prize. They're getting the number go up technology, but they're not getting the freedom go up. So I think it is important for people to consider self-custody and taking that financial sovereignty if they can.